Hi, I'm Jenny Brown and a warm welcome to our weekly buy-to-let mortgage market update. I hope you're keeping really well this week. We've got lots of great things to talk about for you. We've got lots of lender news, loads of really positive changes in the market to share with you. We're also going to talk a little bit about the Bank of England base rate and what's been happening there. And then lastly, just give you a quick run through on the impact of the Queen's speech yesterday and what this means for you as landlords. So lots of great content coming up. So in the last week, Santander have made some rate reduction to their buy-to-let range, with pricing now starting from a very competitive 1.33%. Now their products do have flat arrangement fees, so an arrangement fee which is a set amount rather than charged as a percentage of the loan amount, which often works out better. Particularly for those loans really over roughly sort of £80,000 to £100,000. And they also have free valuations on their products as well, so very competitive both in terms of the interest rate and also with the fee structure they have in place. Now, we don't talk about Santander very often, in part because they just don't change their rates very often, but also because while they're always kind of there or thereabouts in terms of their pricing, their criteria is very steady, but it doesn't really have anything particularly kind of out there, which tends to attract our clients to them. But having said that, they're a really solid lender, their offering's really good and their service is excellent. So Santander are looking to lend to landlords with 10 or less properties in the background. Now, if you have between 5 and 10 properties, they do have a minimum income requirement of £50,000. If it's 5 or less, then the income requirement is then £25,000. Now, in terms of the things that they're quite good at, they are good on property types. So they're happy with ex-local authority flats, flats with deck access, ex-local authority houses as well, I should add, flats over commercials. They can accept studio flats and those properties where there is an element of flying freehold. And just to recap what a flying freehold is, if you imagine that you have two houses adjoining each other, and the house on one side, the upstairs, one of the bedrooms encroaches over the floor plan of the adjoining property. So essentially that part of the property which goes over the adjacent property is the bit that's flying over their freehold. And so, there are other lenders who can accept these as well. Santander are by no means unique in this, although not all lenders will accept them. And what lenders tend to say is that it's essentially a percentage of the overall floor plate of the property, which can be no more than a certain percentage as flying freehold. They will also accept applicants up to age 79 on application. So like I say, a really solid, very kind of high street type offering from Santander, but their rates are incredibly good. Zephyr Home Loans have made some changes to their rates. They've reduced all of the rates on their 75% loan to value standard products and also on their HMO range. They've also increased their maximum loan amount at 65% loan to value to £2 million on any single individual asset. Now, they will lend to limited companies and individuals as well. They don't mind how many properties you have in the background. Their maximum age at maturity of the loan is 95 years old, which means that essentially you can apply for a mortgage up until your 89th birthday. They have no minimum income requirement as well, so really good proposition, which is incredibly landlord friendly. Now, for borrowing on HMOs and multi-units with Zephyr Home Loans, they do require that you have 1 year's letting experience behind you, and that needs to be in the run-up to the mortgage application. So it can't be, I used to let buy-to-lets 10 years ago for at least 5 years. It needs to be, I have a buy-to-let property right now and I have owned that for at least 1 year. So for their HMOs, it's a maximum of 6 beds. For their multi-units, it's a maximum of 6 units, and they have a really generous rental calculation as well. So what that means is that the most generous one is in personal names, 140% coverage, assuming an interest rate of 3.19% on a 5-year fixed rate, which is really good. So a very solid offering from Zephyr, and great to see them making some rate reductions. Habito have also introduced some new buy-to-let rates at 80% loan to value, and these are for individuals and also for limited companies. Now, for those of you who watch these videos frequently, you will know that in the 80% loan to value bracket in the limited company space, we are looking for more lenders to come in to really drive up competition and therefore drive down pricing. So it's really fantastic to see Habito coming into that space. Now, they've also made some other really interesting amendments. So firstly, they have dropped their minimum property value outside of London to £50,000. And they've also made a very bold statement that they aim to issue mortgage offers within 10 days of receiving your mortgage applications. Now, for those of you who aren't familiar with Habito, they're a fairly new lender to market. I think it's fair to say that they are really pioneering the use of technology in terms of their processing, so really looking to expedite things and make the service as frictionless as possible. So actually the reality is that, with a fair win, 10 days is really possible based on the kind of proposition and the way that they do things. Okay, so look, in terms of their rates, so the 80% rates for limited companies start from 3.89%, which actually in that space is incredibly competitive. They have no minimum income requirement up to 75% loan to value lending. For those of you who are looking to go over that, then they need you to be earning £20,000 per year. This can be from property, I hasten to add. And they will be able to lend or take mortgage applications from anyone aged 79 years or below. And they don't matter how many properties you've got in the background as well. So again, a very, very solid offering, which is incredibly landlord friendly. Now, they do accept leases as low as 56 years at the point of mortgage application, which again is quite unique. And that would be subject to valuer's comments. So if the valuer went out and looked at the property and actually the length of the lease was really detrimental to the saleability of the property, you may find you come into some difficulty there. But actually, if the saleability is not affected by the lease term, and this would be, I think, mostly in relation to very sort of prime central London properties, then I think the valuer would be absolutely fine with that. Now, they're also open to ex-local authority properties, non-standard construction, and also studio flats. So for those borrowers who are looking for particularly 80% lending in the limited company space, this is really fantastic news. Okay, so Fleet have made some rate reductions, and their pricing is now starting from 3.04%. Now, I think that one of the real USPs of Fleet mortgages, they're not stress testing the background portfolio. And this is particularly relevant for those landlords with 4 or more mortgaged buy-to-let properties. Those of you who have those properties, you will know from experience that when you apply for a mortgage, the lenders want to know about the background portfolio, and they will apply certain criteria to that portfolio in terms of how the maximum loan to value could be across the piece, and also the rental coverage. And this does vary from lender to lender, but Fleet actually don't really pay any attention to the background portfolio at all, which is really quite unique. So great for those landlords who have found they've come unstuck with this in the past. Now, they also have some very good rental calculations in terms of how much you can borrow per pound of rental income, which start from 125% coverage, assuming a rate of 3.44%. Now, Fleet will accept HMOs of up to 6 rooms and multi-units of up to 10 units. They have a minimum income requirement for experienced landlords of £15,000. Experienced landlords is just someone who already has a buy-to-let property. For the first-time landlords, the minimum income requirement is £25,000, and they will accept mortgage applications as long as the loan will mature before the borrower's 95th birthday. So essentially, you can be aged up to 89 when you apply. The other really great thing about Fleet is that they can accept remortgages from day one. So essentially, if you have owned the property for less than 6 months, Fleet are able to offer you a remortgage straight away against full open market value. We've also seen TSB introduce some new rates at 70% loan to value, starting from a very respectable 1.84%. Now, the TSB offering comes with a free valuation and flat arrangement fees. Now, in terms of who is a TSB borrower, you will be earning £25,000 a year, not from property. You will be aged no more than 80 years of age on maturity of the loan, and you will have no more than 11 mortgage buy-to-let properties. I hasten to add, if you are doing a purchase and using TSB, that means you can have no more than 10 at the point of application, because at completion you're going to have 11. Now, in my experience, TSB are very strong, particularly in terms of unusual property types. So they're very good at studios. They can accept those at just 30 square metres in size. And also flats over commercial are very much subject to valuers' comments. There's no kind of defined list of we would accept flats only over estate agents and, I don't know, offices. What they will just say is, look, if it's over commercial, we just need the valuer to confirm whether or not this is going to be acceptable to us. So really great to see a lender who's got some nice flexibility on property types, bringing in some good lower rates at a relatively healthy 70% loan to value. The Coventry Building Society have made some reductions to their both buy-to-let rates, both for portfolio and non-portfolio landlords, reducing all products by 10 basis points at their 70% loan to value and below rates. So they now have 5-year fixed rates starting from a very healthy 1.89%. The Coventry have a flat arrangement fee. All of their products come with a free valuation, and on remortgages also there is free legal work, and they don't charge any application fees. So very, very competitive. Now, in terms of Coventry as a lender, they have no minimum income requirement, and you can have up to 10 properties in the background to borrow with them. Now, what I would say here is, unlike most lenders, Coventry will ignore anything you have in a limited company when looking at your allowance of 10 properties. So that's quite unique. And they're happy to lend to you up until your 85th birthday. Now, one of the things that Coventry offer, which I really like and which is very unique in the market and actually is incredibly popular with our clients, is that they have rates which are fixed for either 2 or 5 years but come with no early repayment charges whatsoever. So you can benefit from the certainty of actually what are very competitive fixed rates, but also you're not committed for any period of time. And like I say, our clients really like these. I should also probably just add here that Coventry are not going to be lending to limited companies. They're just lending to individuals, and they're looking for very standard properties as well. But the pricing that they offer is very good and their service is excellent. Now, we've also seen the Mortgage Works make changes to their product ranges on their 2 and 5 year fixed rate limited company products, and they've reduced them by up to 35 basis points. So the TMW offering for limited companies, I think it's fair to say I'd call it quite beige, if I'm honest with you. It's good enough and it fits for many clients, but actually there are some restrictions which are worth just pointing out. So first of all, and the key one here, is that they can only accept 2 sort of named borrowers on the application. So when considering that TMW want personal guarantees from all directors and shareholders, that would mean that really their products are only available to those limited companies which have just 2 individuals or up to 2 individuals owning and running them. And that can, like I say, limit things. We often see people who want to have potentially children on as shareholders, or there's kind of more than 2 applicants, so it doesn't work for everybody. Now, TMW have no minimum income requirement, which is really good. They are quite comfortable with those borrowers with larger portfolios, although they are quite restrictive in terms around how those portfolios need to look in respect of loan to values and rental calculation across the portfolio in the background in aggregate. But one of the things that they do that's really good is that at the point of application, you can be no more than 70 years of age, but they will give you a 35-year term. So essentially the maximum age or maturity of the Mortgage Works is 105. The other thing with the Mortgage Works, which I think is really important and worth sharing, is that their product transfer offering is incredibly good. So when you come to the end of your 2 or 5 year fixed rate with them, the rate they're going to offer you to remain with them as a borrower is very, very competitive. And I think it's fair to say that in the limited company space, the lenders are really starting to bring product transfer offerings to the table, but they don't tend to be as competitive as their rates they're offering to new borrowers, whereas the Mortgage Works are actually very comparable. So that's a really good thing for those landlords, particularly who want to take a mortgage with a lender and not have to actually remortgage away from them every 2 or 5 years. Virgin have also released a couple of new deals which are solely for purchase transactions. which come with a cashback of £1,000, which obviously is quite tempting, isn't it? So the rates start from 1.91% and they do have flat arrangement fees. Now, a bit like some of the other more mainstream lenders, we don't talk about Virgin very often, mainly because they don't tend to reprice very often, and also because their offering, while it's very good, there's nothing particularly sexy about it. So to kind of go into that in a bit more detail, to borrow with Virgin, you can have no more than 10 properties in the background. They will require that you earn £25,000 per year, and that cannot be from rental income, so you need to have income away from property of at least £25,000. They can accept applications from those aged up to 78, and they do accept remortgages within the first 6 months of acquisition. What they're going to value the property at is the thing that I think remains to be seen. So generally speaking, what they would do is say, rather than looking at the open market value of the property, they're going to look at how much you paid for the property and how much you have spent on it, and then really work their valuation around that figure rather than the full market value. But you know what, Virgin are a very good lender, and we really enjoy dealing with them. Their offering is very solid, and what they do bring to the table in terms of criteria still fits with a wide number of landlords. So it's really encouraging to see that they're bringing out some products which are designed for purchasers with that rather lovely cashback of £1,000. So there you will see lots and lots of lender news this week, and I think really what we can take away from what we're seeing is that all of the changes are genuinely really positive. So pricing reductions, criteria enhancements, and all of these things really intimate and give a really strong indication about how the lenders are feeling about the property market and the economy more widely. I think for those of you who were with us this time last year, the reporting that we were doing in terms of criteria changes and pricing really went in the other directions. There was lots of lenders cutting back on things and even stepping away from lending temporarily. So it's really fantastic to see that the market has truly rallied and the lenders are really coming back out to play to be able to support the buy-to-let borrowers as they're looking to make new mortgage deals. Last week, the Bank of England voted unanimously to keep base rate at 0.1%. The committee judged that GDP growth slowed in Q1 as COVID restrictions continued to weigh on economic activity, although they added that growth appears to have been stronger than predicted in the February report. So the committee said that the outlook for the economy remains uncertain and depends on the evolution of the pandemic. And in line with their policy guidance, they will focus on the medium-term prospects for inflation, including the balance between demand and supply rather than factors which are likely to be transient. So essentially what they're saying here is that when they're considering what to do with Bank of England base rate, they're not going to be just looking at what's been happening in the last couple of weeks or months. They're going to be looking forward to the kind of midterm in terms of what they think is going to be happening. And I think it's fair to say that at the moment, because of the obviously very positive progress we've made in terms of COVID numbers, but also the kind of threats of a third wave potentially into the autumn, and also really the understanding of how the fallout of COVID is going to shake out over the coming months in terms of the economy, they're simply not willing to push base rate up just now. In terms of the market and what people are predicting, actually we're not expecting to see any movements in base rate for at least 6 months. Now, yesterday on Tuesday, we had the Queen's speech where there were some things which came out which are relevant to landlords and property investors. So I just want to give you a fairly high-level breakdown of what came out of it. And I'm going to break it down between things which are related directly to landlords and then things which are more broadly related to property. So first of all, under the housing reform, it's been confirmed that they're going to be abolishing the use of no-fault evictions by removing Section 21 of the Housing Act 1988. But what they are going to be doing is giving landlords more rights to gain possessions of their property through the courts. Now, they're also looking to introduce new lifetime deposits, and they're going to be improving the tracking of rogue landlords and agents to improve the professionalism within the sector. Now, a white paper detailing the whole of the reform package will be published in the autumn, with legislation following shortly after. Some more information on that to follow as we receive it. Now, in terms of property more broadly, it was confirmed, first of all, there's going to be the welcome confirmation of the end to ground rents. And this is as per the announcement from Housing Secretary Robert Jenrick earlier in the year. There's also going to be the introduction of a new building safety regulator, and this is all really coming back to Grenfell and the situation there. So a new regulator is going to be set up to monitor new building safety. And lastly, the planning reform and home ownership is going to be reviewed with a planning bill which aims to simplify and speed up the planning process while making it harder for homeowners to block new housing schemes. And all of this is really going to be introduced with the aim of being able to build more houses, which ultimately will benefit the housing sector and also the investment sector going forwards. So in terms of the bill, I think it's been met with some fairly mixed reactions. I think some people are quite cynical, particularly with regards to the planning bill, the whole kind of we've heard it all before type thing. But actually, from my mind, there's a lot of positives in here. The removal of Section 21, it's going to be met with some real dismay from our landlords. We can only hope that the changes that we made to the court process will be significant enough to really mitigate any negative impact to landlords on the back of this. What a busy week for news stories, but I do hope you found that really useful. Look, if you do have any questions about anything I've covered off today, or anything mortgage related more broadly, we'd love to hear from you. 0345 345 6788. And as always, there is an abundance of information on our website, mortgagesforbusiness.co.uk. I will be back again, same time next week, with hopefully lots more positive news for you. Until then, please do look after yourselves. And I'll catch you next time.